So many people are in a sad state financially as they struggle with financial literacy. A shocking amount of people are behind on their bills, not putting anything away for retirement, and barely making ends meet situations you want to do your best to avoid. Looking at these statistics will show how common it is to be in a poor financial state, constantly struggling when it comes to money. By being aware of these situations, you can make sure you're doing well and avoid becoming one of these statistics. After watching this video, you might find that you're doing much better than you thought. My name is Chris, and I help teach people about money, personal finance, and investing. If you want to become financially free and not have to worry about money, make sure to subscribe to the channel and like the video if you find it helpful. Just 24% of millennials demonstrate basic financial literacy, according to a study done by the National Endowment for Financial Education. Millennials think they know more about money than they do. Of those born between 1981 and 1996, only about 1/4 of them have basic knowledge of personal finance. But 69% of them gave themselves a high self-assessment on financial knowledge. In other words, most of them think they are good with money, yet most of them are not. Whether poor financial literacy was passed down from their parents or implemented in their own, this is a dangerous combination, and this is not promising them a bright future. People this age should be laying the groundwork for financial success, so their financial accomplishments will compound over time. Instead, many of them are establishing bad habits that will carry them to retirement age with nothing saved. 54% of student loan holders didn't calculate monthly payments beforehand. A study by NFC's data found that most borrowers didn't fully comprehend what they were taking on when they obtained their student loans. Most of them didn't run the numbers to see how much they would be paying each month when it came time to start repaying that borrowed money. This is partly due to the impression that everything would be fine and dandy upon graduation when they begin earning a large income. The loans are going to be easy to repay once I get a job with my degree is a common mindset of college students. However, it's not surprising that young adults with no experience taking out and repaying debt made mistakes here. Most people that have borrowed money can agree that it takes much longer to pay back than they thought it would. Well over half of those surveyed say that they would make a change if they could go through the process again, as they realized that debt payments were larger than anticipated and incomes didn't meet expectations. 43% of Americans spend more than they earn each month and use credit cards to fund the difference. We've all heard the phrase, live below your means and spend less than you earn. But how many of us do that? The Federal Reserve found that almost half of people are living above their means, spending more than they earn, and relying on credit cards to finance the shortfall. This means they don't have enough money to buy what they're buying, and they choose to rely on debt, in high-interest debt at that. There are many problems that could come because of this, but most obvious is that these people are going into debt and paying interest to fund their lifestyle. Instead of earning interest so that they can build wealth, they're in the habit of paying huge amounts. This is a hole that can be extremely difficult to dig yourself out of. 21% of Americans don't save anything. Bankrate found that 21% of Americans spend all their income every month and don't save anything. These people aren't setting anything aside for retirement emergencies or financial goals. How are they supposed to fix their car when it no longer runs? If they have an unexpected expense, even a very small one, how are they going to pay for it further? About 20% of people surveyed save 5% of their income or less. Only about 16% of people have a savings rate above 15%. That's far from what's needed to invest for retirement. Save for financial goals like moving into a new apartment, accumulate a down payment for a home, get a newer car, or even to make minuscule financial improvements. There are various reasons that people aren't saving anything for a rainy day, such as not earning enough money, spending more than they should, and generally wasting money. But making it a habit to save consistently should be a top priority. 66% of millennials have nothing saved for retirement. The National Institute on Retirement Security says that about 2/3 of millennials have no money put away for retirement. Even though retirement seems like a lifetime away, this is the perfect time to put money to work. The numbers are slightly higher for baby boomers and genders, but still not good when you consider that they have less time to prepare for the future. Could this be due to crippling student loan debt or wages that are less than anticipated? Regardless, it's in their best interest to see what they can do to make a change for the better sooner rather than later. While there's a small portion of millennials who do save something for retirement, about 95% of individuals in this age group save less than the amount recommended by experts. 60% of U.S. adults live paycheck to paycheck. Living paycheck to paycheck means you're spending all your income and expenses. Once the essentials are paid, there's nothing left over. If you've ever been waiting for your next paycheck to hit your bank account so you can stay up to date on your bills, you know that it's a terrible feeling. Being in this situation means you're only a few days or one unexpected expense away from a financial disaster, and you might not be able to pay your bills. More than half of American adults are relying on their very next paycheck to make ends meet. This issue isn't isolated to lower-income people either. 40% of high-income consumers live paycheck to paycheck too. It creates a very stressful situation when you're cutting it that close. These individuals should take a hard look at what they can do to break this cycle. Households that carry credit card debt pay $1,380 in interest. NerdWallet found that last year, U.S. households that carry credit card debt will pay almost $1,400 in interest of $1,400. None of that goes towards debt repayment or reducing credit card balances. This is interest alone. $1,400 doesn't seem too crazy, but consider that the money is paid to the bank, never to be seen again. Over the course of 1 year, it averages out $216 per month in just interest on credit card accounts. Credit card debt is often the result of overspending and buying unnecessary junk, but it's not always the case. This doesn't consider interest paid in other debts like payday loans, car loans, mortgages, and others. Just think what those people could do if they weren't paying that money towards interest and were instead using it to pay down debt, save up to pay cash for future purchases, and invest so that they can earn interest. More than 1 in 4 Americans never talked about money management with their parents. For many, money is seen as something that should never be discussed. It would be rude to ask your parents about their finances, how much money they make, how much their house costs, how much they have saved for retirement, and how they manage money. This is likely how money was viewed with their parents as well. Grandparents and parents are not passing financial skills down to their kids. This is at least partly because they don't know much about money management themselves. After all, the numbers show that older generations aren't so great with their money either. Were people supposed to learn about financial literacy? If their parents can't teach them and they don't learn it in school, that leaves them to learn everything on their own, which evidently doesn't usually go well. These statistics should have you sharpening your pencil and writing down the do's and don'ts with money. Luckily, just a little bit of continued research and discipline on your part is all that's needed to succeed.